welcome everybody to the Northside Business Luncheon, our monthly gathering where we bring together Northside entrepreneurs, business owners, organizations, stakeholders, community, all the people really caring about what's happening in business into a space. And now it's a virtual space in order to learn, network, and do all the things that we like to do, right? So this month, our focus is on commercial financing. And really excited about the panelists that we have, and you'll hear a little bit more about them after I get done giving you some housekeeping things. So we do have a panel of folks who will be speaking at the top of the, this show. We will actually have an update I believe before that, and I'll give you more information on that. But generally we have this panel speaking, and we ask that at that time, everyone remain muted so that we can hear well. These are being recorded, so we do want them to play back so folks can catch everything as well. So having your microphone off when you're not speaking is key. Also, what we want to do is, knowing that it's recorded, as much as I love seeing everyone's beautiful face, if that is something that you do not want and you don't want folks on the internet seeing it later on, go ahead and turn your video off. We welcome that as well, but I totally like to watch this in gallery view so I can see people's faces and reactions. Speaking of that, my face may disappear from time to time because I'll be the person doing a lot of the background stuff. So if somebody forgets to mute for some reason, I might mute you. So raise your hand if it's important that you speak so that I can notice that. I encourage everyone to use both the reactions down here to let us know how you're feeling. I don't know if you have upgraded yours, but I noticed that there are additional reactions that have not been there before. If you're watching my screen, you can see some. And I really encourage folks to use the chat as your networking space. So drop your business card, drop your name, your business, your organization, what you do. Are you trying to connect with certain people or organizations while you're in this space? The chat is open for you to do that throughout this entire time. All right, so I'm done taking up space because we got a lot that we want to share with you all. I'm going to pass it over to Anna, who's the community engagement coordinator for Northside Economic Opportunity Network, otherwise known as N.E.O.N, our partner and co-host for the Business Luncheon. All right, go ahead, Anna.
Awesome. Thanks so much, Felicia. So before we get started with panelist intros, I am not sure if he's on the line, but we have someone from the city who is going to give a brief update about Xcel Energy's rebate program for businesses. So Patrick Hanlon, are you on right now? If you are, if you could raise your hand so Felicia sees you.
Yeah, I don't see his name or face just yet, but I'll keep watching for the chat or a raised hand. And we can always, if we don't get him now, maybe pull him to a later spot.
Perfect, perfect. Okay, well, I'm going to go through the panelist intros then, and then we will go to questions. At the end, we will have time, for a brief Q&A. But then if you have any additional questions, feel free to email Felicia or I, and we will make sure we get those to the panelists. And we'll also have a resource list as well at the end, like we send out at the end of every month. Okay. So panelists, when I say your name, if you could just, give a little hand wave, that would be great. Okay, so our first panelist is Kate Speed, who is the Program Officer for Lending and Project Technical Assistance at LISC. So Kate implements LISC's project-related financing and technical assistance efforts. She works with LISC staff, nonprofit and for-profit community developers, and public partners to build relationships and effectively guide projects through the development process from feasibility to completion. Kate.
Oops, you got muted, Anna. Sorry about that. Right after you finished with Kate, I think.
Okay, great. Okay, so Kate has been a program lead for several higher profile lending activities, including the Corridors of Opportunity Loan Fund. So thank you so much, Kate, for joining us. And then our second panelist is Jim Terrell. who is the Principal Project Coordinator and Manager for the Participation Loan Programs at the City of Minneapolis. Jim has over 30 years experience in banking and economic development. His experience includes revenue bond financing, commercial and consumer lending, SBA lending, business plan authoring, and seed capital financing. He is the creator of the City of Minneapolis's Commercial Property Development Fund, which utilizes quasi-equity, patient-subordinated debt financing to facilitate the completion of challenging real estate projects. So thank you so much, Jim, for joining us. And then our third panelist, who I know pretty well, is Anisha Murphy, who is the Director of Community Advancement at the Twin Cities Community Reinvestment Fund, CRF. So Anisha works to help small business owners build wealth in their companies and communities as Director of Community Advancement at CRF, which is a national nonprofit lender based in Minneapolis. She was previously the Director of Community Engagement at N.E.O.N. So thank you so much, Anisha, for joining us. It's good to see you. And then our next panelist is Jean Rixmeyer, who is the Business Banking Relationship Manager at US Bank on West Broadway. Jean is the Business Banking Relationship Manager, and he's passionate about helping business owners achieve their goals. His current role at the bank allows him to be a trusted resource to small business owners and help advise them on banking needs. With 10 plus years of business banking background and previous small business management experience, he brings knowledge and experience his clients can leverage. So thank you, Jean, for joining us. And then last but not least is Rich Esquivel. And Rich is the Vice President and Senior Business Development Officer at Sunrise Bank. And he's been at Sunrise for 21 years in commercial lending and business development. With a degree in business, he has been working in banking and financing for over 35 years. Rich currently sits on N.E.O.N's and MEDA's loan committees, the Metropolitan Consortium of Community Developers Finance Committee, and the Lake Street Council Finance Committee, as well as Lake Street Council's board. So thank you so much for joining us. Okay, thank you. So now I'm going to go into the panelist questions. And so, if you have any questions, audience, during this, please drop them in the chat and we will, go over them at the end. Okay, so the first question I have for the panelists is, what funding is available for businesses interested in purchasing a building? Are there specific funds available for different stages of development? For example, building improvements, interim acquisition, etc. So if you can just, raise your hand or, just, unmute yourself, and someone wants to go first.
I'll be happy to go first. I've worked with a number of the panelists and others on this call in doing commercial building finance. And so we typically see multiple sources of financing in projects as you've described in that question, Anna. You might see new market tax credits as part of it, which we've worked on with Sunrise, US Bank, and LISC. You might see a City of Minneapolis 2% loan, and of recent, you might see the city's new Commercial Property Development Fund forgivable loan. But very often projects in challenged communities have 5, 6, 7, or 8 funding sources, grants from the Met Council, grants from Hennepin County, grants from the state of Minnesota DEED. And so the challenge is accessing all of those funding sources to put together the best funding stack possible.
Awesome, thank you for that, Jim. It's very true that, the city has a lot of, great programs like the 2% loan program, and like you said, the program that, you developed, and that it oftentimes takes a lot of different financing mechanisms to, get a project built. Rich, I saw that you had your hand raised. Did you want to ask?
Can you hear me okay?
Yes.
Hello, everyone. Thank you for the opportunity to be here today. I appreciate it. Sunrise Banks, we are a preferred lender with the SBA. That's one of the programs we do offer. And also, when I go out and meet with customers, I give them a couple of other options, which might be besides the SBA 7A program, and also the SBA 504 program. Just a brief summary of that. It's a 50-40-10 program. 50% of the funds coming from bank, us, Sunrise, 40% coming from SBA via sale debentures. We work with SPEDCO, St. Paul Enterprise Development Corporation, or Twin City Metro Certified Development Corporation for the 40% of it, and then typically 10 or 15% down from the customer, which allows them to get in at a lower down payment. Then lastly, the conventional program that we would run through our bank or a bank, and then with a little bit higher down on 24% down. And then terms are very good. Rates are phenomenal right now. I haven't seen rates this low, and it's probably been years. I'm sure Jim can attest to that. But right now, just stepping back and talking about the 504, on the 40% piece of the SBA 504 program, the rate right now is 2.36 fixed for 20 years. Phenomenal rate. Again, we haven't seen rates. I haven't seen in my term. I mean, Jim, you know, I haven't seen rates that low in so long. Yeah, so giving the folks options is good. You know, we bring Jim in on with the 2% monies. Kate, I know we worked with Kate a lot on our new markets tax credit programs. Sunrise Banks received a $60 million allocation this year in new market tax credits for severely distressed areas of the Twin Cities. This is the second year in a row we received this. Actually, we're working on a couple of, I'm working on 2 different projects right now in North Minneapolis with a couple of different groups with the new market tax credit program. Kate's working on both of those with us. I think we brought Kate in on those, but wonderful programs and great ways to finance the purchase of a building.
Yeah, you know, I would just add a couple of thoughts to this. So at LISC, we know that owning the dirt is really important in communities. You know, that empowers who gets to stay and who may get displaced as communities change. And then we also know that there's challenges around financing real estate development projects where you want to keep spaces affordable, where you want to create place, and where you're not just trying to build the market and kind of drive out the community. So, you know, the programs that Rich and especially Jim has created at the city are really important pieces of like the puzzle in putting these projects together. They're really complicated. In many cases, take a lot of different funding sources. Like most of the projects that we're involved in North Minneapolis, you know, are not just debt and equity. They're debt and equity and a bunch of other sort of complex city or subsidy or subordinate financing sources. So what we're trying, you know, what we try to do at LISC is fill the gap where the market and the government, between kind of where the market financing comes in and the government financing may support the project as well. So we're really trying to fill the gaps. In many cases, those are private equity gaps, like the amount of cash that you have to bring to the table, which can be, you know, a major barrier to getting projects done, especially where the banks may not take on as much risk as they would in other strong markets. So, so one of the tools I'll just kind of mention, Anna asked if I'd bring this up. So actually, let me back up. So LISC provides subordinate financing tools for real estate development to help in conventional projects. But we also have a new tool that we're trying to assemble around interim acquisition financing. So sometimes there's challenges around being able to secure a site where an opportunity comes up, but you may not be ready to do a development, or it may not be an operating property. And this is particularly the case for properties that have been damaged, you know, especially severely damaged in the protests against police brutality after the murder of George Floyd earlier this year. I think there's opportunities here to transform communities and rebuild in maybe a more equitable way around ownership and transfer of properties into hands of businesses that exist in the corridors and districts that were impacted. So we're trying to kind of help fill that interim role of like, let's get the property, hold it, and figure out what needs to happen there. And so if there are properties, I mean, I encourage you to reach out to Anna, who can get a hold of me, or just contact me directly. It's basically this kind of 5-year window to try to help figure out what's going to be the best possible project for the community there, and the best ownership opportunities. And we're trying to really focus on creating wealth and health and opportunity in communities of color. And wealth is one of the key pieces there that I think as a nonprofit, it is a new space for us to be thinking about. It was largely around supporting other nonprofit development organizations. There's kind of a new awareness around these huge wealth disparities in communities. And so supporting folks, businesses especially, who own their businesses but may want to own their space and create wealth opportunities through real estate is a big, I think, gap in the system, and also an opportunity and need.
If I can really quick, Rich, just to make sure we get questions. So, there were some questions in the chat about, how do we know if a rate is good or low? And how do you all, compare what financing products are a good fit? And then, if a business is interested in using new market tax credits, and using these interim funds, how do they go about doing that? And how do we make sure that, credit score doesn't get in the way? Different systemic barriers that have often gotten in the way. Is that still an issue with these types of financing mechanisms?
I'd say call any one of us on this panel, and I would push that over to Anisha, especially to talk about just like what CDFIs do, and what is our role here, and how we can help folks with the barriers.
Definitely happy to jump in. So from a CRF lens, CDFIs play a unique role in the market of providing, to what Kate was just talking about, more sort of riskier loans where traditional banks may not play at. And with CRF, we, like Rich talked about, when it comes to commercial financing and just residential financing, really utilize new markets tax credits and the SBA 7A program to provide capital to communities of color, mainly BIPOC, women-owned, veteran-owned small businesses, where banks probably are more risk averse and may not want to take said risk. And at CRF, we have been looking, in addition, I know this probably is a question down the line, but we have been looking really at sort of how do we provide capital to be very much in line with what Kate said, to really help build wealth for Black and brown businesses, women, veteran-owned businesses, versus just a deployment of a product, right? Those are different sort of perspectives. Is how do we provide capital that builds wealth, not just for the community, but for the individual, versus let's just get a product out here so that we can make money, right? And so it takes partnerships with organizations like the city of Minneapolis, like with LISC, like with N.E.O.N and WBC, to really talk about what true wealth building looks like, and really designing products and services that meet the needs of the community. And so I'm not sure if I'm answering the question right, but I think the role of CDFIs is to play not act as a traditional lender. It's to play a space and really provide an avenue where traditional lending or traditional financing may not get into. So yeah.
If I may add just a couple of things briefly. So you're asking other sources of funding. So as a bank, sometimes we'll get some of the different organizations involved. For example, African-owned businesses. We work with African Development Center, Nasibo Sareva over there in the Cedar Riverside area. If you're Latino, we work with Latino Economic Development Center. If you're Hmong, for example, they have a Hmong business, then we work with Hmong American, who also has taken part in these things. MEDA, I'm on the MEDA loan committees at Metropolitan Economic Development. Pat Parasol and the group are also available. So, and they would come in as subordinate financing, which really helps us if there's maybe some exposure, we're collateral short, cash short, down payment short. A lot of times they'll come in in a subordinate position. You know, along with Jim's group and the 2% monies, they come in subordinate position to us on financing for real estate equipment, rehab, leaseholds, and so on. And everyone's been very helpful. Did I mention the consortium too? MCCD is also there to help. Great organizations to work with.
And I might mention you had lots of pieces to that question. The interest rate was an interesting one. Over the last 10 years or so, as Rich said, things that are in that low to mid 2%, it's unprecedented how low that is. You could take over the last 10 years, 3% as the sweet spot. If it's at or under 3% in the last 10 years, that was and still is a very, very good rate. For those of us like Rich and I that have been in the business a number of years, you go back to 1982, a great rate on a new car loan was 14.9%. If you think about that in today's world, that makes you wouldn't even consider it. But that was the rate you gave to your best customers, 14.9%. I made a lot of loans at 14.9%. No one would touch that today. So 3% you could use as sort of a marker. When you see rates under that, it's an excellent rate. The thing I want to mention so it doesn't get overlooked on some of these financing programs like new market tax credits, they are not like a car loan. Quite literally today, if you're a member of a credit union, you can apply online for a car loan and have an answer by the time you push click or send, and you're approved within 15 to 20 seconds. A new market tax credit project takes months and months, if not years. Very often, and Kate and certainly Anisha, both allocatees of new market tax credits will mention, and Rich using them, very often you get in the queue the year before you're actually ready to do it, and that's how it happens. And so it is not quick and easy. These are, as Kate said in her comments, very complex financing programs.
New market tax credits, again, we received an allocation 2 years in a row. Again, the 60 million we received for this year, next year. But we are looking for good deals right now. It's working with the severe distressed areas of the Twin Cities. You know, and it's what's shovel ready. Do you have all the approvals, city approvals? I mean, it's been a slower process now. It takes months, as Jim explained. Because no one's in the office and it's just taking a little bit longer, appraisals, environmentals, and so on. But if anyone has any questions on new markets, it's a long process. It's kind of a lengthy discussion, but I'd be happy to sit down and talk with you and meet with you and let you know what we have to offer in the market tax credit program.
So another question, thank you for that. Just we get often is, you know, business owners don't think that owning their building is achievable for them. And so, I mean, obviously it depends on the building, it depends on many factors, but, you know, what percent on average can they get covered, can be matched? Because oftentimes they just see the sticker price and that's not really the actual price. So I think that would be helpful for some context. And then Jim, I know that you've worked with a lot of businesses, you know, to help them with this financing. So if you could give some examples, you know, of like a recent building, I think that would really put things in context for people.
Rather than a specific building, I'd like to do sort of a model. And Rich certainly, or anyone on the panel would want to also touch on this. If I don't care what the price of the building is, if you could come in and finance 50% of the purchase price and easily cash flow it, have your debt service coverage ratio be within the range that bankers want to see. And this isn't about teaching ratio analysis, but it's one of the most important factors that bankers will consider. So understanding that particular ratio is key. If you can finance 50% of the building with first mortgage commercial debt, 40% with the combination of gap financing tools that Kate and I offer, and the last 10% with equity, That's what we consider a grand slam easy deal to do in my field. And so it doesn't matter whether the purchase price is 1 million or 5 million. You shouldn't be looking at a $5 million building unless you can easily service 2.5 to 3 million in debt with the cash flow from the business and have a debt service coverage ratio of a minimum of $1.20 for every dollar of debt, 1.20 or greater. And again, this isn't the forum to get deep into that, but these are the things that are part of the preliminary analysis that bankers or economic development professionals do. 50, 40, and 10 would be something that if you can easily show yourself you can do it, we have something to work with. We very often see 20 on the amount that can be covered with first mortgage debt, 1 or 2% as the amount of equity that the developer brings, and all the rest in between is the gap. That's harder, it takes longer, but we won't run away from it.
Can I just add to what Jim just said, not to get technical with the numbers, but I also think this is something that we threw around when I was at N.E.O.N. You know, ownership, whether it's a property or a business, is a mindset shift as well. And understanding what it means to be actual owner and not just a worker is also something that needs to be factored in on sort of whether or not you can do it, because we oftentimes don't make that shift. And so I just wanted to add that in, is that ownership is very possible, but you have to have the mindset of ownership in order and know that you're going into business and know what it means to be in business. And it's not a feeling, right? It gets technical to what Jim was saying. It's like a mindset shift. And so just taking on that mindset shift and knowing that I can do anything I put my mind to as long as I shift, right, is really key.
Yeah, that's a really good point, Anisha. I think I was just going to call out a couple of resources, kind of training tools for this for folks. So the city of Minneapolis has a program called the DTAP program. It's a developer technical assistance program. It's a great training program for if you actually want to become a real estate owner, developer. ULI has a program called Ready that I think the applications are open for right now. Again, I think that's a little bit longer kind of continuum of training, and would be a good place to go to. You know, it doesn't hold you like to having to own something, but if it's something that you aspire to, those would be good places to start. And there was one other thing. Forgot, I lost it, but yeah.
That is really helpful, Kate. And, you know, Anisha, that's such a good point. You know, business, when you own something, you have to put money down and you do have to take a risk. But these, you know, different financing mechanisms allow that risk to be manageable. And so, you know, that's definitely something to, you know, make sure that you're aware of. And, you know, do you want to take that risk? You know, we can definitely help that, you know, help you through that and help you navigate it, but it still is, you know, you own it. So you own some of the risk. So
one point I'd want to add to that is if you can just, is you want to make sure, you know, as you can see, none of this happens overnight and it's something you work towards. So don't be afraid to just have a conversation about, you know, one big thing with my clients that I meet with is I just at US Bank is I want to just get an idea what their goals are. And then you can help them work towards that point. You know, it's not, you don't wake up one day and decide you're going to buy a building. The process isn't, you know, it just doesn't happen that quickly. So you just want to figure out what, you know, create a plan for yourself, work with your partners, have discussion with your bankers, you know, and your advisors, so you can kind of so you can reach that goal.
Those are good thoughts. So one other thought that did come to my mind is we've seen more and more joint ownership and collaborative ownership. And there's I think just a movement around cooperative ownership models and structures. So, you know, one of the projects right on West Broadway, 927 West Broadway, is a collaboration between two private businesses and a nonprofit or foundation. But, you know, joint ownership is another way to get at this as a way to sort of enter into real estate ownership. Maybe you do your first project with a partner or two, and then you go off and do some more on your own. But often that first project, kind of getting over that barrier of doing it for the first time, especially for the financing system for banks and even for the CDFI lenders, capacity and track record are often the first things we look at, which makes it really unfair for folks who, again, who haven't had the opportunities and who really want to own property. So getting that first project done allows you a lot of leverage for kind of getting those next, whatever, 10 properties that you want to own, accomplished.
I wanted to add 2 seconds worth to what Jean just said. It was extraordinarily important. I teach a course called How to Borrow Money from a Bank or Other Lender. And one of the most important things in that is that you should never apply for a loan without knowing that you qualify for it. Well, how do you do that? Well, Jean mentioned talk with him, talk with Rich, talk with your banker before you actually need it. You've heard the old adage, you can never borrow money when you need it. It's easy to borrow it when you don't need it. And there's a modicum of truth to that. It's not actually true, but you don't want to go into the bank in a panic mode. If you know that you're going to be looking at expanding and buying a new piece of equipment in 6 to 9 months, go to the bank now, see what they would require. What are their requirements? What do you need as far as your ratios go? How much could they provide in terms of the percentage of coverage? What kind of term? Because some equipment they would do longer term, some shorter. Is it big enough to qualify for 504 financing versus shorter term 7A? These are the kinds of things that you talk about well in advance with your banker. And so by the time you are actually ready to fill out the application, it's something that the two of you have already agreed to. So talk with a banker in advance.
That's a wonderful point, Jim. That actually leads us to our next question that, I wanted to specifically ask, and you've covered a lot of it, but specifically ask Jean and Rich, which is, what are 2 ways business owners can prepare for their first conversation with you about, commercial financing options? What are some things that oftentimes don't think about before they meet with you? Really like them to think about first.
Good. So, things to think about. This person may have an idea, and put down at least make an attempt to do a business plan. There are a number of types of different, like SBA.org has a business plan. It looks overwhelming because it's like 3 pages of questions. Banks aren't looking for a 500-page business plan. What are your ideas? What do you do? Who's the management? We look a lot at experience and capital also. What experience? If a person has never had restaurant experience and they come in and go, I want to start up a restaurant. Well, how are we going to do that? Who's your management team? What's in your plan? Who's working with you? Who are your partners? Capital, how much capital do you have? And they go, well, sometimes I'm wondering, maybe my credit's not the greatest. Well, you can go to a number of different places to take a look at your credit and see what your credit score is. Our minimum credit score, for example, would be 650, I think, is our minimum right now. But at least, make an attempt at a business plan. I work with a lot of organizations like the consortium. There's another group, a couple of folks from the consortium when started their own at our next stage. MEDA, LADC, and so on. But they like the person to at least make an attempt at a business plan with some sort of projections, and you can get some projections based from your CPA or an accountant. But it's always helpful to have just a brief plan of what you want to do. Cash, where's the cash coming from? Again, capital, and again, it's important because how much cash do you have? Maybe you're not ready now, and experience is important. Hope that was helpful.
Yes, no, that is really helpful. And then what about, I'm just looking in the chat, and this is a really good point that Felicia just made. What documents should people have together? You mentioned the business plan, knowing your credit score, but are there other documentation that, people should have together?
A personal financial statement. All banks have a blank personal financial statement to kind of take a look at assets and liabilities, what you own, what you owe. Banks will need copies of liquid statements or copies of your checking and savings accounts to verify how much cash you have, capital you have to inject into the business or the purchase. We have all the SBA documents we send out. So I send out, I have a kind of a boilerplate document of here's what I need from you, and it's pretty lengthy. Last 3 years personal finance, or excuse me, last 3 years tax returns, personally and business, debt, kind of a debt structure, what they currently have in debt, you know, projections, if you have a building, what leases are currently there, projections on the building, projections on the business. So if we need 2 separate sets of projections. But just that's, you know, to start, that would give us a good start. And then all the SBA applications and information come later, but at least he gets a chance to take a look at all that and then kind of determine where they'd like to go and the type of financing they'd like.
I have a question actually for Rich and Jean. If, you know, if somebody doesn't have a giant net worth, you know, and doesn't own property, you know, beyond gap financing and city supported financing and tools, are there ways that those folks, are there options for folks to get third-party guarantees or other creative ways for folks who don't have just, you know, deep financial pockets or maybe have some credit challenges?
The credit challenges, you know, we have Sunrise started up it's called the Credit Builder Program. So if you have no credit, of course, no credit. Been in the finance business for years. No credit is better than bad credit. But we have a Credit Builder Program where a customer would come in and put maybe $500 or $1,000 into a checking or savings account we'd hold, and then set up a note, and then make payments on that. And then after a year, you have bank credit, which is better. And it's better than just the credit card credit someone may have. But if you have bank financing and it shows you have bank loan, paid loan, that does help credit. Other options, as I mentioned, the consortium has funding. I mean, if we're looking for gap financing, we go to all these different groups, ADC, LEDC, MEDA, to help. And sometimes they'll take a portion of, you know, a larger portion of the loan to help the customers. So did I answer the question, Kate?
Yeah, you know, just to add on that too, and a lot of it will depend on, you know, some things you just being upfront with your banker right away, like, hey, listen, I have some credit challenges. And so we can try to work through some of that on the front end. And then also maybe if there's an issue with not being able to bring down payment funds, but maybe, you know, we can look at deal structure. Maybe you've been part of the business for X amount of years, and maybe you're able to they bring in some sort of ownership to change the type of SBA structure that we'd look at. You know, it's just kind of have those conversations on the front end so they can just get to, you know, so we can maybe try to figure out how we can get you that funding.
I think
I'd like to add,
sorry.
If possible. First, I sent a PDF to everyone in the chat room. Hopefully they received it. Things needed for a loan application. It's a generic list of things, and if anyone didn't get it, I can get it to you, Anna, and you can get it to everyone. In the old school banking, the technique of training lenders or loan officers where they had to be collectors first. And I'm going to give you 3 questions that a collector would always ask before he or she would make a loan. And it seems cold, it seems cruel, but it is factual, and it's part of the C's of credit that bankers use. The first question is, and never mind the gender bias, the first question is, can he pay? Can he pay back the loan? The second question is, will he pay? And the third question is, what can I do to make him pay? And again, decades ago, that's how simple it was to make a decision about a loan. Can he pay? That's a matter of the capacity to pay. Will he pay? That's a matter of the credit history, the credit score, the character, and the background. What can I do to make him pay? That's collateral. And you strip it all away. If you can answer yes to all of those questions yourself and prove it and show the proof, things like a primary, a secondary, or tertiary source of repayment as it relates to collateral, you likely can convince the banker you have a good application.
No, thank you for that. I mean, we will definitely be sending this out, checklist, because that is, yeah.
Sorry, Anna, to cut you off. I was gonna add just to the question that was asked, and I think to what Jim was saying, I know right now we're talking about financing for property and ownership, but it's just important around the board to start building a relationship with your financial advisor before you actually need the capital, right? So whether it's capital to actually build, buy a building, or it's capital for working capital. And that we seem to be really important during the Paycheck Protection Program. So many banks were prioritizing their clients because they had established relationships with those individuals. And so my suggestion to those who are on the call is start building these relationships with, the Sunrise, the US Bank, CDFIs like CRF, the relationship with K-Speed at LISC and Jim Terrell at the city, so that when your project comes due or opportunity comes due, you have those established relationships and those that can back you. So when those questions that Jim was asking, can you pay? Will they pay? They can vouch for you, right? The people who have that relationship, they say, yeah, I have a relationship with Anisha. I know for a fact that maybe her credit might not be the highest, but I know for a fact that she can pay on her debt, or she can service this, or she can get or work with the N.E.O.N or LEDC or META to help with the technical training in order to make due on the loan. So that's really important aspect that I think a lot of times we overlook when we talk about financing, whether it's financing for a property or just general financing.
I just want to second that. I totally agree that I often tell people that they have to find an internal champion. The kind of projects that we're supporting actually need an internal champion at the lending institution, at the city. I often send folks to Jim because he'll advocate internally. And if you just look at a deal on the surface, it may not fit the guidelines, and just, people toss it away. It's, if you have a relationship and you have somebody that'll go to bat for you, that goes a long way. Even though we're supposed to be objective, I mean, if we're passionate about something, that's gonna impact our ability to drive things forward internally.
Those are such good points. And, I will just say, that's why N.E.O.N, we like to start businesses with not taking out big loans right away, because you probably, won't qualify. And you have to make sure that you have everything else set in place, including those relationships with the bank before you do that. So completely agree with that. Guidelines, like I put in the chat, can be made flexible if you have a proven track record that your business is making a profit, that it's growing, which definitely go to TA providers who can help you with all of that. So we don't have a ton of time left. Does any of the panelists want to say anything? Because I see that Patrick is on the line from the city. So is there anything else? I just want to give a few minutes to people.
Can I say
one more?
Oh, go ahead, Jim.
All right, thank you. I had one more point on the technical aspects of borrowing that is often overlooked and is very important, I think, to bankers or most lenders, and that's terms and conditions. Very often, people will try to borrow operating capital or working capital or just capital using term credit. And that's kind of like wanting a 30-year single pay note for a mortgage to buy a house. The use of the money doesn't fit the source of the money. So banks or lenders like the city use long-term credit to finance real estate, medium-term credit to finance equipment, and revolving lines of credit to finance short-term operating cash flow timing differences or operating capital. And very often we see applications for 10-year term loans when they really need operating capital. And so sometimes people are turned down, not because they don't qualify, but because they are asking for an unreasonable loan term. And so that's one other thing to think about and talk about well in advance with your banker or lender or CDFI to understand the terms and conditions.
If I just 1 second, I saw up here too the question, different stages of development improvement. I don't think we touched on that yet, but many times banks will, we realize that you're going to need some improvement. So, you know, you're purchasing the building and then you need so much in improvements, but you can include that in the loan. And then what would happen is we could do an interest-only period of, depending on how long it'll take, larger projects. I mean, I've worked on a couple larger projects that'll be a 2-year rehab. So it's interest only for 2 years. Also, I mean, you know, sometimes it's a smaller building and maybe need 60 days. Well, it's not going to do us any good to charge you principal and interest until you get it filled or leased up or all the improvements are done, equipment and all the installations. So we can do, and we've done it with the city, Kate, where we carried over maybe 60, 90 days, 30 days to get the improvements done. And then the principal and interest payments would then kick in, but at least gives you some breathing room, you know, without paying principal, but just paying interest over the 60 or 90 days to get you up and running.
I guess the point I wanted to make too is this is doable for people if they want to purchase a building. You know, don't be shy about having the conversation. You know, have a, you know, as far as if anybody wants, you need someone to advocate for you and help you navigate the bank or whatever institution you're working with. So again, back to building that relationship. And if anybody wants to understand what US Bank can do and I can help them navigate the bank, you know, feel free to reach out. You know, this is doable. You can, you have a lot of resources here and people here that want to help you get to that point.
And
before Patrick jumps in, I know there was a question to talk about financing for developers, and there's tons of programs out for developer financing and BIPOC financing. And internally, we have been looking at, in partnership with LISC and others, what does financing look like for contractors and contractor financing to meet the needs of some of these sort of development projects. And so just wanted to plug that we are working. It's still in progress and would love, I know that like I've looked and seen Jasmine was on the panel and just Mr. McGlory is on the panel. So would love to sort of pick your guys' brain as to what are you seeing as needs, because there's not, you know, everyone can't be a developer, not everyone wants to be a developer. So how do we create products and tools and solutions to help you all as contractors also scale?
Yes, I will include that. That's a really good point, because that has been a huge barrier that, you know, I know that I've been in meetings where people, you know, oftentimes say, you know, we want a, you know, BIPOC contractor on this project, but like, where's the financing for it? So that is huge. And I will include your information in there, you know, in the sheet that I give out at the end of all of this as a resource for that, for contractors to reach out and say what the barriers are, because that would be wonderful. So, and
one thing I was going to offer too, even around like development happening, if you go back to, was it our 2 business luncheons ago? Was the one on property zoning and development. You all, I'll drop the link to our YouTube so you can subscribe, but go back and see that one as well. We were actually able to hear about some of the developments happening. You get a little bit of insight. You'll notice that some folks on this Zoom meeting were a part of that or on that panel as well. And that'll be another clue into some folks you can possibly connect to around what they've been experiencing, what they've learned. I noticed that folks like Mr. McGlory, I saw Schmiel back there too, Mr. McGlory, you know, they have a development happening in North Minneapolis as well. You might've seen it on the news or in the paper. So check in with folks like that. They have a lot of great insight. That's all.
Yeah, no, that's a great point, Felicia. And I will reshare that resource document, because that has a lot of information from that luncheon, you know, about different resources that developers can utilize. So I'm going to go into, and Mr. McClure, I know you have a question. So I'm going to go, before I answer your question, I'm just going to go really quick to Patrick here. And then can you put your question in the chat? Just so I, you know, remember to ask it. But Patrick, I want to turn it over to you about that XL Energy rebate program. And then we'll definitely have time at the end for some questions really quick. So Patrick, turning it over to you.
Hello. Thanks for inviting me on today. So I just wanted to talk about a program that we came out with. There's a group of community organizations, community groups, city staff looking at some different ways that we can realign resources in the city, and Felicia and Anisha are a big part of that. Jim is on it as well. Looking at ways that we can realign some of our resources for recovery, economic recovery, and then some of the businesses that were impacted from the murder of, after the unrest of the murder of George Floyd. And so one of the ways that there's different programs in each one of the areas of the city that they're looking at realigning resources. One of the areas is in energy and climate. It's how we can realign some of those resources for energy efficiency and solar to provide some assistance on that end if there's people that are interested in have projects in terms of a rebuild that they want to, sorry, I'm looking for my share button as I'm talking here, that they want to invest in energy efficiency and solar. A lot of times people think of solar as like a nice to have, or, like when we have enough money, maybe we'll do that. But with the incentives that they have in solar right now, especially for those impacted businesses, there's definitely a chance to put money into, there's definitely a chance to put money into the pockets of businesses. I think I have it here. So this is a one-pager that I'll send out. Is that showing up for everyone? And so we're offering incentives up to $50,000 for solar projects. Pretty much anyone, if you go to our web link, you can find a list of contractors. Any contractor that works in Minneapolis that installs solar is familiar with our program. And so they can line folks up, and they do a great job of pulling together the Excel rebates, the federal credits, the city incentives, the state incentives, and pulling all that together in a package. So if you just go to our webpage, look at that contractor list, you can get a few different quotes, and then they'll tie right into our program. So and then they're also pretty good at being connected with financing. It's great to have some of the finance providers here on the line today to be aware of the funding that's out there as well. And then in terms of energy efficiency, that's up to $40,000 per project. And energy efficiency is a little bit of a different universe, is that the contractors don't tend to be as connected with some of the incentives that are out there. So we usually direct people to the Minnesota Chamber of Commerce with their Energy Smart program, and there's an email for the connection over at the Chamber of Commerce. You email them, they can come out, do a site assessment, and then they can also connect you. It's good to connect with them because they have money as well. And so they can connect you with some of the funding that they have. They can connect you with the city funding, with the utility rebates, and then financing on the back end as well. That's usually through CEE, Center for Energy and Environment. And then again, they work with a number of different financing providers and can connect folks to financing. And so they can break it down in terms of, what's a monthly payment, how much can it be financed for, what's the monthly payment, and make that kind of a one-stop shop for energy work. I broke down one. Let me try resharing. I broke down just one example of an energy efficiency project just to give you an idea of what a typical energy efficiency project might look like. So, and this is taken from an actual energy project that we did. So total project cost is $16,000. Xcel Energy, that's one thing. Centerpoint and Xcel are also offering triple rebates during this time of economic recovery. And so you connect in with that funding. Energy Smart, that's the Chamber of Commerce, as I mentioned, has funding. And then Minneapolis Forward, that's the city of Minneapolis funds. Remaining funding for a project like that would be $5,600. You'd get an annual savings of $3,600. You'd have about a 1.5 year payback. You'd have, I think it'd actually be less than $118 a month on the loan. and then you'd have savings of $300 a month. And then I just worked out some of the lifetime savings there. So I just wanted to give that as a quick, like, little overview.
Patrick, sorry, we're kind of running out of time here.
Yep,
so
sure. Yep, I was just going to end with that.
With me, and I'll share it with everyone. And I'll reach out if they have any questions.
Okay, thanks.
So we're going to go to, just final. I know we only have a few more minutes, so we just want to give like really quick updates on kind of what's next. Mr. McGlory, if you have your question, please put it in the chat and we'll make sure that we get it to the panelists. And everyone else, please put your questions in the chat, if you have any.
How do you do that?
Mr. McGlory, are you on your computer or phone?
Computer.
Okay. It'll be an option for a chat, but I have availability right after this. Can I call you or you give me a call? Or is this a general question for the full panel?
It's a general, yeah. It's
gotcha.
Finding pre-development planning funds. Usually we talk so much about permanent financing, but the biggest problem we have found out is that how do you finance? It can be up to $300,000 for pre-development funds. And
that's a great question.
How do you actually find funds to finance that?
Yes. You know what? We should talk after this, actually, but we will absolutely enter that question and have a response sent to everyone in our follow-up. So, Mr. McGlory, I know you're subscribed, so we have your email. You'll get that answer. And so and everyone else knows, like, I am actively working on creating something where you all have access to those pre-development funds. So yes, that is a great question that has been asked. I hear it. And I'm one of the people working on it. Jim is one of the people I've been in communication with on how to do that. So yes, Mr. McGlory. But I'll let Anna finish with the last updates. We will absolutely follow up on that one. Thank you.
No, thank you for bringing that up because that's a really good point. And I know a lot of people have had that issue. So it's definitely not just you. So really quick, just a little update. And I know it's 1 o'clock, so I understand if people have to leave. But well, first of all, thank you to the panelists because I know you might have to leave. So, thank you so much. This was really helpful, and we'll get those resources to everyone shortly. And so, just an update on Black Friday on Broadway. I know, probably everyone's aware that that's the big holiday market that, N.E.O.N and WBC organize. We will have more information soon about what's going to happen with that. In the meantime, so check on our social medias, and if you're subscribed to our newsletters and email lists, you'll receive an update by the end of the week. In the meantime, look at the Black Friday on Broadway website. So we have a website that connects to the vendors' social media pages, and then if you have a website for online ordering, it connects to that as well. So I just put that in the chat. So, please share, please, visit. We have some amazing vendors this year. So, something will still come out of it regardless. So that's just a little update on that. And yes, please subscribe to the YouTube channel. And that's the quickest way to get this recording. You will get it a bit later if you haven't subscribed because we post it on social media. So that is all. We will get those resources to you depends on busy Black Friday and Broadway goes by the end of this month with all these follow-up resources.
Yeah, we'll be following up soon on Black Friday on Broadway. I want to thank all of our panelists. Y'all are amazing. So great to see you again in this space, Tanisha, in a different way. Our board members on here, we got all kinds of people in the room. So everybody unmute your mics, say your goodbyes, your peace outs, and your see you laters.
I'll take care. Be well.
Thank you.
Yes,
Thank you.
Thank you.